everyone, and welcome to a really unusual video that I'm making for the first time. It's going to be sort of a podcast. This is going to be me reading a pretty interesting article about how to invest in gold and silver. This is an issue of great interest to me because we buy and sell a lot of Pokemon cards, and what's interesting about the Pokemon cards is while they're not quite like gold and silver, they're a collectible, they do share some of the same properties. So this is going to be a nice long article. If you'd like to listen to the whole video, you can just hear it in the background. I'm not really going to have anything interesting playing on the screen. I'm just going to read the whole article from beginning to end. This is by Lynn Alden. It's from a website that talks about investing, and in this case, it's going to be about investing in gold and silver, right? This was updated January 1st, 2020. So it's a fresh article that talks about investing in gold and silver. Again, gold and silver shares some ideas in terms of investment with Pokemon cards. Let's go ahead and get started. So again, I'm just going to read the whole thing. Here we go. Diversification is one of the most important things to get right when managing a portfolio. What's a portfolio, by the way, guys? It's like your nest egg. It's where you're putting all your investments. Let's continue. When done properly, diversification can increase the rate of return you can expect from a given amount of total risk or decrease the risk required to achieve a given rate of return. Okay, so there's some really important ideas here. Risk. What is risk? Risk is like when you put all your money in one company and then that company fails to return profits and basically your investment collapses. The value of the stock you bought just falls and you rapidly lose all your money. So whenever you're investing, there's always a certain amount of risk. And when you want to invest safely, sometimes what you do is you buy a little bit of this, you buy a little bit of that, and then when one thing falls, the other thing rises because of the property of the things you're buying. All right, so that's what we're talking about with the risk. Next, when some assets are rising in price, usually other ones are declining. I just said that, which creates opportunities for contrarian investors to cycle capital in one of those undervalued assets. What does it mean by cycling capital into an undervalued asset? Basically, what it's saying is, let's say that the market's doing really well and the price of precious metals is low because of this, because people are like, the economy is doing well. There's no risk. So they buy a bunch of gold because gold and silver is cheap right now. And when the economy collapses, historically what happens is precious metals go up in value. Then they sell all of their precious metals and they buy something else that has gone down in value because of the collapse of the economy. It might be stock or it might be homes, right? So that's what it's talking about, cycling your capital between undervalued assets. You don't want to buy something that's overvalued. You want to buy something that's undervalued. Let's move on. In my opinion, having a small allocation to precious metals like gold and silver is a useful part of diversification because they are partially uncorrelated meaning not connected, with stocks and bonds and have different and unique risks and opportunities. There may be times where a larger allocation is tactically useful as well. This article provides extensive information on how to invest in gold and silver for part of your portfolio, pros and cons, All right, so it's a pretty long article. It breaks into parts. There's a lot to learn here, so if you listen to the whole thing, you might come out with a better mindset for investing in physical assets. Here we go. So this topic is titled, The Role of Gold and Silver in a Portfolio. Put simply, precious metals serve as a hedge, that's like a protection, against market volatility, political instability, currency weakness, and economic collapse. Those are all risk topics, right? Because they are chemically unique, physically rare, and easily malleable, gold and silver have been used as money across much of the world for thousands of years. While they can also be quite volatile themselves, they historically store wealth very well over the long term. The stock market's kind of like that too. Even though the stock market dips and it rises, it mostly just rises. Like if you look at a historical chart of the stock market, despite the dips, it always goes up. Benefits. Precious metals have no credit risk, maintain their global purchasing power over the long term in the face of inflation or currency devaluation, and they aren't very tightly correlated with stocks, bonds, or real estate. Downsides. Commodities, including precious metals, produce no cash flow themselves and can be quite volatile. Most precious metal miners are historically poorly managed companies that lose a lot of money. What do they mean there's no cash flow? So this is kind of one of the issues that's similar to like collecting collectible cards like baseball cards or Pokemon cards. Basically, they don't generate any profit. When you're the Coca-Cola company, you sell soda all day, and this turns a profit, and then you give everyone who owns one of your stocks a little bit of that profit, and we call that a dividend. Gold and cards don't do that. Basically, you're just speculating that they might go up in value, and maybe they won't at some point. Maybe they'll peak, and then they won't go up any higher. It'll depend on the demand, right, and what people think that they're worth, what people have faith in. So that's what it means by the volatility here. Due to all this, whether investors should own gold and silver is surprisingly controversial. On one hand, there are people who distrust the global economic system, and they invest almost entirely in precious metals. On the other hand, many mainstream portfolios have zero exposure to precious metals, with some investors believing that no respectable portfolio should have any gold or silver allocation at all. Okay, that's really interesting. This site is read by investors from all over the world. For many of them, you don't have to ask why gold and silver might be considered a valuable asset to hold. I have readers from Greece. Remember Greece, guys? Greece just a little while ago there. They were having a real serious financial crisis and Germany had to save them. Argentina, Turkey, Nigeria, and virtually every other country. So another country you might consider is like Venezuela. Venezuela had economic collapse, and then they had hyperinflation. And if you happen to have, before the collapse, if you had used your Venezuelan dollars to buy gold, when the Venezuelan dollar collapsed, your gold, which has a global value, not just a Venezuelan value, has a global value, the gold would have maintained all of its value. See, this is why people purchase gold and silver. Again, it's a hedge or protection against economic collapse. It's like a hedge is like a bet that something's going to, if it does collapse, you still win. So we're going to continue the article. I think investors in certain countries like the United States get very complacent. They think a lot of the bad things that happen to other markets can't happen in the U.S., even if it happens multiple times in the U.S. in the past. We saw firsthand recently in 2018 when the currencies of Argentina and Turkey plummeted. Their stock markets cratered and bond yields spiked. For those of you who don't know what a bond is when the government sells debt and they pay interest on the debt. And you can buy some of that debt, but the interest isn't very good. Okay, so bond prices fell and inflation-adjusted returns for a variety of assets became terrible. And basically what that means is the value of gold went up. These things happen from time to time around the world. Investors from those countries who hold gold or assets denominated in foreign currencies, they're the ones that made out well from the carnage in their domestic economy. That's exactly what I was explaining. So if you're in Venezuela and you used your Venezuelan dollars to buy gold before the economy collapsed, once the economy collapsed and the value of the dollar over there was worthless, your gold, because it's a global currency, is still quite valuable. So how much should you hold in gold and silver? That's up to you and your unique circumstances. How old are you? Where do you live in the world? What's the rest of your financial situation like? Personally, I think putting 5% of a portfolio in precious metals is appropriate. Okay, so that's opinion, guys. That's coming from the article. That's the article writer's opinion. You don't have to agree with them. Maybe you want to do more, or maybe you don't want to do any at all. So he says, I think putting 5% away is good, and maybe even up to 10% in some cases. When he says some cases, maybe he's talking about if you live in a very volatile place in the world. If you invest too much, you risk missing out on better growth historically offered by other asset classes, for example, stocks. However, having no allocation leaves you exposed to risks that stocks and bonds can't always compensate for. Okay, so the article makes 2 points. Shark Tank investor Kevin O'Leary holds 5% of his portfolio in a combination of gold, bullion, and gold ETFs. I think gold ETFs are some kind of stock you can buy. When gold goes up in price, he sells it. And when it dips, he buys some more. So basically, it's like a thing he buys when it's low and he sells when it's high. But you kind of have to be maybe at some point an expert in understanding how gold goes up and down in order to do this. And this is why people get jobs in the financial sector, just to watch this kind of stuff and try to make money on it. Hedge fund billionaire Ray Dalio similarly recommends holding a 5 to 10% allocation to gold as part of an all-weather strategy, a portfolio that holds up well in a diverse array of economic conditions. All right, so that's a suggestion, like he's saying Ray Dalio does it, but consider this. If Ray Dalio had just put 100% of his money into a stock and it turned out the stock just does really well throughout his lifetime, then he actually would have lost money for having put some into gold because, again, gold doesn't actually generate money. It's a speculative asset. People just believe it's worth money. See what I'm saying? That's it. Gold and silver don't actually make money. People just believe it has value, and then it's, globally used. So it's very, very interesting subject. Let's continue. I think both of those examples are reasonable, and that a small allocation to precious metals within a portfolio that otherwise mostly consists of stocks, bonds, and real estate is appropriate for many people. So listen to what the article writer is saying. Not only should you buy stock, you should have some bonds, and you should have some real estate as well. So he's kind of tapping into multiple markets here. All right, next topic. 2 key challenges with precious metal investing. Learning how to invest in gold and silver is challenging because directly investing in any commodity is filled with headwinds against you. First of all, commodities, including precious metals, they don't produce cash flows like a profitable business would, or even an interest-paying bond does. Instead, they just sit there as you hope that they go up in price. Gold and silver are good at holding their value over the long term against inflation, but apart from that, they don't really do a lot for you by themselves. That's right. So here's a quote from Warren Buffett. It says, Warren Buffett perhaps said it best. The problem with commodities is that you're betting on what someone else would pay for them in 6 months. The commodity itself isn't going to do anything for you. It is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. So basically, Warren Buffett here is saying, you're buying something for $20, assuming the next guy's going to buy it for $25. And if it turns out that's not true, you actually lost money in gold. Right, so gold and silver, the value of the gold and silver, it rises and it falls. Well, how do you make money on the gold and silver? Basically, you have to buy it when it's low and sell it when it's high, but that means some guy bought it when it's high and then it fell back down and he lost all his money. In other words, if you buy gold and silver, it's also possible for you to just totally lose your wealth having bought the gold and silver. Again, like that O'Leary guy, you basically have to be an expert in knowing when you should buy and when you should sell. And even then, there's still an aspect of gambling to it or predicting the market to it, right? That you just don't know until you know in hindsight what it would have done. So speculative asset. So, secondly, there are transaction costs associated with precious metal investing. Transaction costs. All right, so that's like if you go to the bank and you say, I want some gold, or probably not the bank, but like a gold dealer, and they're like, yeah, I'll sell you some gold. Here's the market value, and then here's the cost of buying it from me. So let's continue with the article. If you buy physical gold, there's a company in the middle that makes a profit. They buy it at wholesale prices, turn it into fine investment-grade gold, and sell it at retail prices. There are potential shipping costs as well, and there is a cost associated with security and storing your gold, along with a risk of having it stolen or lost. If you instead invest in an ETF that holds precious metals, they have an expense ratio which covers security and all the administrative costs of managing the fund and their hoard of metal. So it sounds like an ETF is like a company that just buys a bunch of gold and then lets you invest in that company. And if the value of gold goes up, maybe the value of I don't know. So I don't know what an ETF for gold is here. All right, let's continue. So not only does typical precious metal investing not produce cash flows and instead relies entirely on the metal appreciating in price. Again, remember, not only does it have to appreciate it, you have to sell it once it appreciates, which means you're selling it to a guy who's about to lose money on it. Investors start at a loss due to the associated expenses along the way. Okay, and again, that means when you go to buy the gold, there's like a middleman fee when you go to buy the gold. So this is all very interesting stuff. Let's continue. There can certainly be a place for physical precious metals in your net worth. Some investors use it as a hedge against catastrophic risks, like the collapse of a national economy. But overall, there are substantial downsides. That's why my strategy for gold and silver investing is to hold a diverse mix of gold and silver ETFs, as well as precious metal streaming royalty companies. The dividends from the companies pay for the expense ratio of the ETFs so that the portfolio has a self-sustaining precious metal hedge. The rest of this guide discusses the pros and cons of holding precious metals in the form of 1. Physical gold and silver, 2. ETFs and options, or 3. Miners and streaming royalty companies, and explains how to approach gold and silver valuation. By the way, so this is so interesting. It sounds like you can invest in a gold mining company. What an interesting idea. I guess if they strike gold, then you're going to make money. But if they fail to strike gold, you shouldn't have invested. You see what I'm saying? You shouldn't have invested. So it's like a whole nother area of expertise that would probably take you a long time to figure out. All right. I don't know if I'll read the rest of this here. Let's continue. Method number 1, physical gold and silver coins bullion. This is probably what I would look into because it would be fun. And this is probably what you're interested in as well, buying an actual like gold coin or silver coin. So it says here, the oldest method for gold and silver investing is to just buy some physical coins or bars. The advantage to the physical approach is that it's the safest, least complex way to invest in gold and silver. You buy some from a reputable vendor and hold it in a safe place. However, it quickly starts to get more complex than that. Where do you store it? And how do you keep your gold safe? Personally, I think owning some gold coins tucked away in your home and an envelope with a bit of hard cash is a good idea. We've all seen areas hit by devastation, either economic or weather related, where it's good to have some hard assets on hand, meaning you have some cash tucked away for a very serious emergency. You can't always rely on banks or electronic payment networks to provide required funds during a time of crisis. So that's very interesting. If you live in a first world country, most of you watching this do, I'm sure, you're used to your credit card always working. Imagine if you had no internet and your credit card stopped working. You would just need a bunch of cash. And imagine if the banks were closed too. You would just really need a bunch of cash. But again, you just assume that'll never happen to you. So next it says, I'm not talking about zombie apocalypses here, just your average run-of-the-mill major economic problem or natural catastrophe. In 2015, during Greece's economic crisis, a run on the banks resulted in withdrawals being limited to 60 euros per day. You'd have to wait in long lines just to get a trivial amount of cash. In 2017, when Puerto Rico was devastated, did I say Puerto Rico was devastated by a hurricane and the whole territory was without power, business couldn't accept credit cards and cash was needed for everything. But many banks were closed and others were limiting withdrawals to $100 a day. Again, there were massive lines at the bank and a handful of working ATMs. That's why having some physical cash and some gold silver coins stashed away for times of emergency is not a bad idea. But once you start getting into large amounts, like investment amounts, it's unsafe to store physical gold and silver in your actual home. If you want to hold more, it's important to store it off-site professionally with security. This comes with regular fees, which eats away at your investment. Historically, gold and silver rise much faster in price than storage fees, but it can be volatile along the way. So what they're talking about is if you're going to hold a bunch, let's say like $5,000 of gold in your home, well, I don't know. What if your house gets broken into and the bad guy finds it? What if your house gets burns down to the ground? The gold would probably melt with the home once it gets hot enough, I assume. I don't actually know that. I'm not an expert on the melting point of gold. But yeah, I mean, there's risks to holding a lot of gold physically in your home, which means you would probably have somebody with a huge vault, some kind of company, store the gold for you, and then you're paying fees for the gold to be held. So this is it's a very interesting issue. It's actually an issue I think about all the time with the cards. You know, if I have a $4,000 booster box, it's like $4,000 that goes up in flames if my house burns down. I'm sure other card investor type people like Gary, he's got all those Charizards, and some of them are worth like $40,000. Where does he store those? That's $40,000. He keeps them all in a little case. If somebody takes the case, he just lost probably like, I don't know, $500,000. I don't know how many cards he actually has in terms of value, but he would have lost an enormous amount of value. So storing your valuable cards is actually an interesting topic, and we could probably read another article of that sort for security on holding something like a valuable collectible asset. You know, it's not just Pokemon cards. There are Magic cards, Yu-Gi-Oh cards, baseball cards, and there's probably a lot of other interesting articles like this to read about it. So, did you guys enjoy this? Again, there's not really going to be much to watch on the screen. I'll just have some background footage of something if you really want to watch. The point of these sort of videos perhaps are to be more of like a podcast. And did you learn something? Yeah, did you learn something? Does it kind of open your mind up to ideas about earning money and investing? Investing is really important, guys. I hope everyone here watching does a little bit of investing, because I need you guys to have a retirement fund when you're older so that you don't go around asking for everyone to pay for your retirement. That's the problem we have in 2020 is you have a lot of people who are retiring and they just don't have any savings. And now they're asking everyone around them to pay for them to retire, basically. You know, I can't afford my medicine, which means I can't afford my house payment, which means I can't afford to see what happens. So everyone has to learn how to invest. It's probably one of the most important skills you can learn in life, and it seems like not enough is done to teach people about this. So it's a subject I've always had a lot of passion for, which is why the Pokemon cards has been a lot of fun for me. Anyways, thank you for listening. Give me some feedback on how you felt about this. And yeah, let's go ahead and wrap things up. I want to thank you all for watching, and I'll see you guys next time.